Hi, it's Tom again. Thanks for joining us for the Ask Tom video series. Today we're going to be talking about dividends and how their payment may be affected during tough economic times like we're experiencing this year. As most of you probably know, some companies offer dividends when you become an investor in their stock. Dividends are simply distribution of their profits, and they're a way to reward shareholders for being shareholders in a company. Well, dividends, because they're a function of profits, can sometimes be changed. They can be suspended or they can be eliminated. And sometimes those things can happen during tough economic times. Certainly we've had our challenges this year, and the economy is still reeling a bit. We're still trying to get back and see this recovery that we're all hoping comes quickly. So I received a lot of questions recently about what's going to happen with dividends, and are companies going to continue paying them, and they're going to suspend them or reduce them? And the answer is sort of complex, and my answer is it depends. So different types of companies are being affected differently during the pandemic, obviously. Some companies are seeing their business boom, some companies are struggling a bit, and some companies unfortunately are going to disappear. When you look at investing in stocks that pay dividends, there are different things to consider. One of the things you should also consider in consistency with what you're going to buy, you should look at whether the company is offering common stock or preferred stock, and some companies offer both. These are two different types of investments that certainly offer some contrast. Common stock is what you're probably most familiar with, and if you turn on the TV and you're watching whoever, Kramer, or one of the other talking heads talk about stocks, they're probably talking about common stocks. So if you hear a company announce that they're suspending their dividend or lowering their dividend or maybe even increasing their dividend, it's most likely a reference to their common stock. It's what you see trading in the S&P 500 or the Dow, and it's what people will most usually relate to. But there's another type of investment that also pays dividends, and it's called preferred stock. Preferred stock is a different class of share. And while it technically is stock, it behaves and performs much more like a bond. Companies actually use it as a way to finance their businesses. Oftentimes financials, banks, big banks, will offer preferred stock. When you invest in preferred stock, what's preferred about the stock actually is the dividend. So preferred shareholders are paid the largest dividend, and they are paid dividends first. So the dividends that are going to be paid by preferred stocks are generally going to be higher and much more stable and consistent than the dividends paid by common stocks. That's the first thing you should know about those differences. The second difference you should know is that a common stock is going to be traded in the free market, and its price is going to go up and down. It has no par value or basis for valuation other than the business they generate. Preferred stocks have par values. So they generally are thought of as less volatile and perhaps a little safer investment than a common stock, because the majority of the return they're going to generate is based upon the dividend. So in this type of environment, yes, it's very possible that some companies will either lower their dividend or suspend their dividend. That should be considered, and it's certainly something we consider when we make investments in companies that pay dividends. Their history of dividend payment and the percentages that they pay is one of the key points that we use in evaluating whether or not we think it's an appropriate investment for our clients. So yeah, if you're going to invest for dividends, you certainly should do a little bit of research and see what that company's track record is. Certainly there have been other rough times in our past, and some companies have done a phenomenal job, quite frankly, of continuing to pay dividends to their shareholders, regardless of whether times were good or bad. So that's absolutely a key point and something that should be considered. If you're looking for a strong stream of dividends, you may also consider preferred stock. Of course, it may or may not fit your personal portfolio, but it is a good way to invest in generally larger companies that pay high dividends, and that dividend is going to be just a little more secure than what you'd find in a common stock. So again, sort of a big topic. If you've got further questions, you're welcome to contact me, and I'll be happy to do my best to answer all those questions and have a discussion with you. Thanks for tuning in.